Hey guys, this is Andrew Keen from KeenOnTheMarket.com. This is your daily video recap from April 23rd, 2012. This is for the S&P minis, oil, and the euro. What happened today? We got slammed. I've talked about this for a while. Corrections don't happen 1 week. So when we had this big down day, or the couple of big down days, corrections usually take 3 to 4 weeks. And for a healthy bull market to get to the next level, corrections are needed. Stock market, and nothing goes up forever. It pulls back and then goes higher. So I think this is just a minor glimpse in this pullback to this 1484, which is my year-end target. So I drew these lines in. This was the bull channel we're in. The second we broke the bull channel, what happens? Do we start reversing to the downside, have a head and shoulders top, or do we find buyers coming in to move higher? I think we're going to move higher. I just think it's going to take a little time. So this is your daily chart. This is very important. Let's go to the monthly chart. In the monthly, you could say this is a double top. This is the first bear month we've had since September 2011. So I could say, if I traded off the monthly, I want to get short on the close of this bar on the monthly and have my stop above it, maybe 1425. So this could be a bear. This is a bear flag on the monthly. There's weekly, monthly, daily, 5 minute. Let's go to the 5 minute now. 5 minute, we opened up this morning, sold off a little bit. We got a triple bottom on the 5 minute, 1354. The point of control for tomorrow will be around this 1359, 1358 half level. We had the high of the day come in towards the end of the day, right at this 1364. It's only a 10-point range today. I was expecting a very tight range. I sold an SPY strangle. I took 11% profit on that. And I wasn't expecting a big range today because we didn't have any economic data. We do have GDP on Friday, FOMC tomorrow, and Apple earnings are tomorrow. So I thought today, might be a little calm day, even though we did gap lower. So this is a huge gap lower, 10-point range today. We've been going to this about 15 to 17-point range, so very, very tight range. Tomorrow we should get more movement. Let's look at crude. If we look at crude on the 5 minute, we got a little of the bottoming in the morning. Our low was 101.83. This 101.80 level and this 180 level is very, very important. We got some buying pressure. We tested the lows from Friday. The lows from Friday is the high from today. So that's very, very important that we rallied all day in oil. And then if we look at the daily chart, I've been talking about these overlapping bars for a while. I've been talking about how I think we test down to this 100.7 level before we get to 105.50. We got pretty close. We got about $1 away from that. I remain very, very bearish in oil. One more I wanted to look at real quick was the euro. So the euro, we're still in this triangle. I think we're going to go lower. I think we get a 27.5 before we go to 35. So I would, if I wanted to put a big, position on, if I wanted to put a wider stop gap position on, I would have, sold on Friday, had a stop, 250 bips higher, and I would have, targeted for something lower. So this is the euro. Let's look at the 5 minute chart. And the one trade I should have taken, and we have to make sure our timetable is always set. So in the euro, it has to be 24 hours because it does trade 24 hours. I was actually looking to sell it right here, actually, and I missed it. I was trying to sell on the close of this bar. I thought today was going to be a bearish day for the euro. I would have sold at this bar. I would have had to see where my targets were to the downside on the daily, but I would have hit some targets down here. I did not get in this trade. I was kind of mad. I was trying to sell 42, and then it got down to 07. So I probably would have took a winning trade, and maybe I would have taken a stop on the half of it. But euro did close at the high of the day, like the market. This is Andrew Keen from KeenOnTheMarket.com. One more I want to pull up real quick. Remember, the live trading room. I trade futures, Forex, equity, and equity options live, real time. I had a Netflix, great winning trade today. I took 11% on an SPY trade. I had a VXX trade good for 27%. These are all taken real, live, announced out loud in the live trading room. I just want to look at Apple real quick. They have earnings tomorrow. So Apple gotten hit hard. It's gotten hit hard. So what happens to Apple tomorrow? Does it correct even lower? $45 strata. What does that tell me? The stock's going to either 525, put this in here, or it's going back up to 620. I think it goes higher. I'm an Apple bull. I'm either always long or flat Apple. I'm currently long it. I have call flies on, and I'm short some January put spreads. So I am long it. I've not gotten hurt at all in this movement. I've actually been making money in this movement. But I think Apple does go higher in the earnings. I like this tail on the bottom. Let's see how it reacts tomorrow. I think Apple goes to 620, 625. I do have a call fly on for May. This is Andrew Keene from KeenOnTheMarket.com. If you want a free trial to the best trading room on the web, email sales@KeenOnTheMarket.com. And have a great night, guys. Hey guys, this is Andrew Keene from KeenOnTheMarket.com. I can also be followed on Twitter, Keen on Market. This is your S&P Euro and Oil update for video recap for April 19, 2012. So this is market profile. This is how a lot of traders trade. Floor traders came up with this a long time ago. Shows you all the volume where the most volume trades. So today 1377, that will be critical level. And we have the value area low where volume started getting bought, value area high where volume started getting sold. These are all critical for tomorrow. Point of control will be 1377. Looking at tomorrow, it's saying everything in a general stance above the point of control. It's bullish. Everything below is bearish. Value area low. If it tests down there, we've seen buyers in the past. Supply and demand curves. If we go up to 1386, we've seen sellers there. Supply and demand curve. So 1377, 1367, 1386. That's market profile. It's very important. Let's look at the daily chart. And I talked about this, how we broke out of this range, and now I think we're in this bull channel for all of 2012. Broke out all these overlapping bars. I think stuck in a range 1335, 1420. We're not going to get out for a while. Let's look at the 5-minute chart and look at today's range. Very, very nice range. You saw a little pop in the VIX today. We opened up this morning. Let me get something set for you guys real quick. 999 is correct, and here we go. Boom. Open up this morning at 1381 quarter. We had the high of the day at 940, so outside of the first hour. So the second straight day, we did not have the high or low within the first hour. High of the day, 1386 half. Selling pressure all day long. We're going to put the Ichimoku cloud in here, just so we know. And never mind. So then we saw selling pressure all day. I was talking about this 1382. The second we broke 1382, we were selling off. So this was a key level as a point of control. Sold off. Low of the day, 1365 half. Nice little flag here on the bottom. If I want to take an aggressive long, I like to see tails. I want to see, for me to get long the market on the bottom, I want to see a big tail on the bottom. Means the volume got down there, buying pressure the whole way, closed on the high. And the reverse way, this is a bear bar. This would be the reverse way, and that'd be a sell. So let's go to crude real quick. Crude, very, very interesting day today. In crude, we opened up at 102.70 at the high of the day at 102.93. We just got smacked around 1 o'clock. We took out the lows from the other day. 101.67 was the low today. I continue to be bearish on oil. If we look at the daily chart, we took out the low from yesterday. We took out the low here. Next level to the downside is 100.68. If we crack the $100 level, big threshold, we could retest down in this 96 level. One more thing I'm going to look at was the euro. And the euro is in this triangle. We've been talking about this triangle forever. The longer it stays in the triangle, the more it's going to break out at some point. Which way it goes, I think the euro goes lower. I think oil goes lower. So on the 5-minute chart, we opened up this morning with the low of the day, 131.01. We had the high, 131.56. Only a 55-point range for the euro. Very, very tight range for the euro. If we look at this daily, I still continue to be bearish on the euro. I think we would test this 127 half level to the downside before we test this 135 level to the upside. This is Andrew Keene from KeenOnTheMarket.com. Remember to follow me on Twitter and get a hold of the live trading room. Futures, Forex, equity options, and equities, all real-time, real money, no sim accounts. Have a great night, guys. Hey, guys, this is Andrew Keene from KeenOnTheMarket.com. This is your S&P, Euro, and Oil update for April 20th, 2012. Friday expiration, equity options expiration. What's going on today? Continue to stay in this 1335 to 14 range. I talk about this a lot. I think we'll be stuck in this range for a very, very long time. This is market profile. I bring up every single day. So a lot of overlapping days. We haven't got out of this 1360 to 1390, a 30-point range over the course of about 8 days. So what do we have important for Monday? 1377, point of control. Value area low, 1368. Value area high, 1385. So we've seen sellers constantly come in for the second straight day, sell at 1385. This time the buyers didn't come at 1378. They came in a lot lower, 1368. So on Monday, these are going to be important levels, 1368, 1385, 1377. That's market profile. That's how the traders on the floor The big traders trade. Let's look at the 5-minute chart real quick. Let's look at the daily first. So the daily, we broke out of this range. We're in a bull channel for a very, very long time. We broke it to the downside. Now we're consolidating. What happens when we consolidate? Overlapping bars. Neutral paper. Are we going up? Are we going down? Overlapping bars. Till we break 1335 to the downside or 1420 to the upside. I think we're stuck in this range. Yes, it's a pretty big range, 85 points. You can take it and tighten a little bit, saying maybe even 1355 to 1400. So that's only about a 45-point range. FOMC next week, Apple earnings, Netflix earnings, Triple M earnings. Next week will be an interesting week. So overlapping bars. I'm very, very neutral. I do not have a stance to the bull side or the bear side just yet. If we break out to the upside, I want to get long. If we break to the downside, I want to get short. I've been playing this very neutral. Let's look at today's 5-minute bar. Sorry about that. So let's go to the 5-minute chart. Here we see it opening. Bring this over here. Open up in the minis at 1378.25. We have the high of the day at 1383.25. After the first hour. So this is the third straight day that we have not seen the high or low within the first hour. 80% of the time we do. So I take that in consideration. 3 times that we did not see the high or the low in the first hour. So 1383.25. A lot of overlapping bars here. Then we got some selling pressure towards the end part of the day. We did close on the low of the day. The low of the day was 1373.5. So a very tight range today, about a 10-point range. The thing we're going to be looking at next week is FOMC. Euro looking very, very strong. Let's bring up the euro real quick. We look at the day chart. We're still in this pattern right here, stuck in the middle. I think we test down to the downside, 127.5, before we test to 135. However, we're stuck in the range. I don't want to play all these overlapping bars. Look at the 5-minute in the euro today. We've been talking about the euro being really, really flat intraday. It's hard to trade the euro. Look at these overlapping bars. Who wants to play into this? Not me. I want to play breakouts. So in the euro, we had about another 35-point pip range. So this is very, very tight range. One last one I'm looking to look at is oil. Oil, very strong day today. Oil, very strong day. We had the high of the day at this 104.22 level. We saw some selling pressure, but the seller got bought. We filled the gap to the downside, and we looked to see where the gap would be. It'd be the highs of these bars. So we filled the gap, and then we got buying pressure to come back. Look at how interesting this works. With support comes resistance. Resistance comes support. So this is resistance yesterday. It was the high from yesterday. We went and we touched the high of yesterday. Boom, popped right back about 70 cents. So let's look at the daily chart in oil. Still stuck in this range. I think oil goes lower. I think we test down to this 100.79 level before we test 105.5. However, I do not have a position on. I don't like to play ranges when they're in the middle of them. If it gets up here, then I'll look to get short. If it gets down here, I might look to get long. I want to play breakouts. One more I want to look at real quick. Apple down $12.50 today. So Apple, look at these movements. Wow, Apple was up 6, ended up down 12.5. Apple's testing this range. We talked about this in oil. Resistance becomes support. This level would be huge for Apple. I'm just going to put in where I think my huge levels in Apple will be. So 50-day moving average is also right here. Isn't that ironic? 368, very, very critical. Earnings on Tuesday. I have a bullish position on. I am long call flies. 600 and the 660s short twice as many as the 630s. I think Apple gets a pop. I think their iPad and iPhone numbers should be good. As an Apple bull, as a long-time Apple bull, I'm either flat or always long Apple. I'm never short Apple. I would rather see a sell-off into earnings than be really high. Intel, IBM, those both sold off the 52-week high. Microsoft bounced down $3, then it popped on earnings. So this is Andrew Keene from KeenOnTheMarket.com. Have a great weekend, guys, and I'll see you back next week.